Yeah, it's going to be a red-hot day in the markets today, and not in any good way. Tom Piotrowski over at CommSec. So day two of a pretty big sell-off today, Tom.
It's a good observation that you make, Pete. Yes, the market's concerns, particularly in the US, have now swung away from inflation to a question of whether or not the US Federal Reserve has been dragging the chain in relation to cutting interest rates. And that was seen through the lens of weaker employment figures on Friday, and that translated to the second day of acute selling as far as US stocks were concerned. So we had the Nasdaq down by 2.4%, the S&P 500 down 1.8%, the Dow Jones was down 1.5%. In weekly terms, you had the Dow and the S&P 500 down by more than 2%, and the Nasdaq was down by around 3.4%. So the nub of the issue, Pete, were the jobs figures for the month of July. So 114,000 jobs were added to the US economy last month, and that was well below the 175,000 that was anticipated. And what we have seen consistently in recent times is downward revisions to the first estimates that government statisticians have been putting together for US jobs growth. So what we've seen over the course of recent months was, undershooting the first estimate. So we've been overestimating jobs growth lately in the US. So that's part of the reason that there was that acute sell-off. Wages numbers were also below what the market was looking for. And you also saw the unemployment rate nudge higher to its highest level since October of 21. So when you marry that up with some subpar reporting in relation to earnings, which we particularly saw out of the tech sector, you can understand how this has sort of gathered some momentum, and you've seen that selling push on to the extent that it has. So the local market today, we're expecting the ASX 200 to fall by about 1.5% on the back of that more than 2% decline that we saw on Friday. And as you might imagine, in an environment where Chinese growth has been moderating, commodity prices have seen quite a bit of a correction. So over the course of last week, oil prices were down quite substantially. They were down 3% on Friday. We have iron ore down by about 3% in the last week. So mining and energy stocks are going to be at the forefront of the selling today.
Yeah, right. Okay, not much on the up there. Tom Piotrowski, thank you.